It's hard to believe, but they're planning massive taxes on unrealized Bitcoin gains now. They're deciding all of this in France right now. It's not a law yet, but if I understand correctly, it's just a matter of time before this could potentially become a law. That's so disastrous because it's really equivalent to a Bitcoin ban. They're making it so unattractive for Bitcoin investors to own Bitcoin here that it's almost like a Bitcoin ban. I'm really at a loss for words. And the really, really bad thing is that if this really goes through here in France and becomes law, it could also make the rounds in Europe. And then it may only be a matter of time before it becomes law in Germany too. I mean, even aside from Bitcoin, if we're taxing unrealized gains on things like stocks or real estate, that's such an incredible intrusion into people's property. It's just unimaginable. And the crazy part is, it's not just Bitcoin that's under fire. They're planning to tax unrealized gains on passive, non-productive assets in general. That's just unimaginable. And then the crazy part is, it's not just Bitcoin that's being targeted. They're planning to tax unrealized gains on passive, non-productive assets in general. The goal is that passive crypto assets should no longer remain tax-free. Critics like Demonglofia are calling for equal rights for all assets in 2001. So they're saying now that all assets should be taxed equally, and they're declaring Bitcoin as a non-productive asset. They want to massively tax all of these because it can't be that someone buys Bitcoin for 500 euros and suddenly it's worth almost €1 million. And we have to somehow deal with that difference. They should all be heavily taxed here, because it just can't be that someone buys Bitcoin for 500 euros and now it's suddenly worth almost €1 million. And we have to somehow deal with that difference here. Let's do an annual taxation. I still don't quite understand how exactly this is supposed to work with the unrealized gains, like how you would pay for it and all that, or how the taxation is even supposed to work. Because that would mean that you'd have to sell some of your Bitcoin holdings just to pay taxes on the unrealized gains. So this is just unbelievably twisted, what's going on here. There's also this clip in the French Parliament, but I'm not going to play it for you because it's all in French. Here it says, on the 26th November, the French Senate voted for a tax on non-productive assets, including digital assets like Bitcoin. So, as I said, as I understand it now, it has actually already been decided here, and it now only needs to be turned into a law. How exactly this will work here in France, what kind of processes are involved, whether there are still veto rights, whether an objection can still be lodged, whether it can be changed or turned around the rudder, I'm not entirely sure. But that's ultimately what I've been telling you here for 2001 times. Hey, in a collapsing system, all boundaries will be broken. If we have this debt system, this fiat system, then the socialists, and what's happening here are socialist measures, they're going to try to squeeze every last cent out of you because this is akin to robbery. You can debate whether a 5% tax or a 10% tax is robbery or not, but this is becoming theft. It's not just about taxing income or consumption anymore. Now they're taxing unrealized gains. I mean, you can debate whether a 5% tax or a 10% tax is robbery or not, but this is really heading towards theft. Now, it's not just about taxing income or some consumption stuff. They're taxing unrealized gains. That's a boundary that has never been touched before. Until now, it was always said, okay, if someone sells off their profits, then that's fine, they pay tax on that. And by now, a lot of people have come to terms with that. But now they're crossing a line here. Now they're saying, hey, not only do you pay taxes when you realize any gains, but also if you haven't even sold your assets yet. If you've just had your Bitcoin sitting in your wallet for 10 years, you now have to pay taxes on it every year just for owning it. This is so perverse, and that is why I say that the EU is a sinking ship. There's no other way to put it, because instead of making their own country more attractive, instead of saying, okay, hey, let's make our economy more efficient, let's get our act together, let's implement better policies, instead of doing that, they're just thinking about how to squeeze people even more, how to extract more money, how to introduce even worse taxes, even more disgusting taxes. So, I'm absolutely stunned by this approach. Of course, you can say that it's not a law yet, and it doesn't exist in Germany either. In other countries, they're already considering it. I think, wasn't it Italy where they were also considering it, but then it gets overturned again, and there are always countries that have proposed it. I think Denmark was also one of those countries, and those have basically always been just proposals. But in France, it really looks like the Macron government is going to push through and take a hard stance against Bitcoin. So there's actually an amendment that was published, and I translated it from French to German. And there are several points we can go through because it really makes it clear what a sinister plan this is. It says here that the current taxes on real estate assets, which is called impotence sur la fortune immobilière, blah blah blah, French jargon, will be replaced by a tax on unproductive assets, impotence sur la fortune, unproductive. And here, there are several points we can go through because it really makes it clear what a sinister plan this is. Here it says that the current taxes on real estate assets, which is called impotence sur la fortune immobilière, blah blah blah, French jargon, will be replaced by a tax on unproductive assets, impotence sur la fortune, unproductive. This includes a new definition and expansion of the tax scope. Inclusion of Bitcoin and digital assets. The new tax on unproductive assets now also includes digital assets such as Bitcoin. These are classified as unproductive assets because they do not make a direct contribution to economic dynamism. So it's really sneaky how they're arguing this. They just say Bitcoin is such an unproductive asset because it doesn't have any cash flow, because it doesn't contribute anything to economic performance, and then they feel the need to tax it heavily. But what about the euro? Does the euro contribute anything to economic performance here, other than basically robbing you of your purchasing power? Or what about gold, for example? What about gold? In theory, gold would then also have to be heavily taxed here. Could also be that gold falls under the regulation as well. As I understand it, it could also be that gold falls under this, but I can't confirm that. I can imagine it, though, given how they're arguing, because gold is also considered an unproductive asset. But what you have to understand here is that Bitcoin is just like a raw material, like steel, wood, water, gold, or whatever. This means that, in theory, every raw material, even water or wood, would have to be taxed here. That means you go and cut down wood, then you somehow leave the wood lying around for 2 days, suddenly there is a forest fire, there is suddenly a wood shortage, suddenly your wood is worth twice as much, you would have to pay unrealized profits on your wood. That's the logic behind it, and it's so far removed from any common sense what's happening here. On the other hand, Bitcoin is an asset that could really help get the economy back on track because you have to operate much more efficiently. And what is happening here is so far from any human sense. And on the other hand, Bitcoin is an asset that could really help get the economy back on track because you have to operate much more efficiently. In a Bitcoin system or any system that is not based on credit, you cannot simply trade inefficiently through debt, infinitely finance wars through the printing press. That's not possible with Bitcoin. That's why I just don't get the argument being made here. And then it goes on to say here, there's a third point, a broader tax base as it's put here. In addition to Bitcoin, other digital assets, financial assets, idachi, savings accounts, liquid assets, luxury goods, yachts, art objects, antiques, and undeveloped land are included in the tax base. So this is just insane. Even your yacht, your lembo here, luxury goods, liquid assets, savings accounts, everything is unrealized. Okay, you could say that with a savings account, there are no unrealized gains because it pretty much always goes to zero. If unrealized gains are taxed, if I have unrealized losses, I want something back from the government. I have unrealized losses. Government, compensate me. Because the state never gives you anything, it just wants to take. If you think this logic through, you could say, I put my money in a savings account and now I have unrealized losses. Government, give me some cash for that. But no, it looks like they're only taxing the gains and the losses get ignored. They say, tough luck, hit by inflation. And that's crossing a line. It's not just that the Bitcoin folks should be up in arms about this, but also everyone who has any kind of assets. And that's just crossing a line. So it's not just that the Bitcoin folks should theoretically be up in arms about this, but also everyone who has any kind of assets. If you have a yacht, okay, not everyone has a yacht, but everyone has a savings account, and even the people with a savings account are now theoretically being taxed here. I really don't get how they're planning to tax savings accounts because, like I said, there are no unrealized gains, just unrealized losses. Then it says here that the goal of the reform is to promote economic, productive investments while also taxing assets that are considered economically inactive, like digital currencies or unused land. Oh man, this argument is just ridiculous. I don't know where it comes from, maybe from some socialist school or something, but it's just so dumb to do this. I can't put it any other way than to say that people are just holding on to their Bitcoin. They're just saving it. And that's really bad because if they're just hoarding Bitcoin, then it's not getting circulated in the economy. It's not in circulation. That's always the goal with fiat currencies. You simply inflate the money so much that people are forced to spend their money as quickly as possible. This leads to very inefficient decisions. You have a very high time preference. You want to spend your money as quickly as possible. But that also means that we buy a lot of cheap products, plastic products, which in turn leads to us wasting the environment and so on. And that is ultimately the idea that we don't say, hey guys, we want to give you a tool to save, but rather, no. We are inflating your money. We are responsible, together with central banks, for massively inflating money. But if there's still some protection like gold, real estate, or Bitcoin, you could save outside of the euro in your own default currency. You could say you can still escape into Bitcoin, gold, silver, or similar. But no, they just say, nope, we're going to tax that heavily too, so you can't save in Bitcoin, gold, silver, or yachts. You're just forced to blow your money on some nonsense. And then later, the Greens complain, the whole planet is going down the drain, we have so much overconsumption, blah, blah, blah. Of course, we have overconsumption when you're being pushed to just blow your savings on some junk, because otherwise, you're either getting hit by inflation or now being massively taxed. And then the Greens complain again like, oh hey, the whole planet is going down the drain. We have so much overconsumption, blah, blah, blah. Of course, we have overconsumption when you're being pushed to just blow your savings on some junk, because otherwise, you're either getting hit by inflation or now being massively taxed. And the kicker here from the amendment is actually the fifth point. Here it talks about paradoxical tax exemptions, and it criticizes that the current regulations allow assets like yachts or digital currencies to be used to avoid taxes, while more productive investments like real estate are taxed more heavily. So it's really unfair that the taxation on Bitcoin is still relatively low here. And I could imagine something similar happening in Germany too. There's also a 1-year holding period for Bitcoin holdings, so you can be tax-free here. I mean, there have already been proposals from the Greens to abolish that, and eventually, the socialists will come along and say it's unfair that a property in Germany is taxed more. Or no, you can't say that because real estate has a tax holding period of even 10 years. But let's say stocks are taxed more heavily in Germany than Bitcoin. Now, of course, Bitcoin has to be taxed more heavily too. And then it goes on to say that the lawmakers hope to encourage investments in more productive areas like corporate shares by including Bitcoin and other unproductive assets. So that's what I mean. They want to push you to just blow your money, and then you end up investing in some company that has all these third-party risks and so on. They don't really want what's good for you. They want to push you into third-party risks. And it also says that the tax exemption amount for the new tax will be raised to relieve households that would have fallen into tax liability just because of inflation. Honestly, I'm really at a loss for words here. I don't know. Maybe you guys have something to say about it. So feel free to drop your thoughts in the comments below. I still have a big recommendation for you, and that's coin tracking. It's the best tax tool, at least in my opinion, that's out there for tracking your Bitcoin and crypto taxes. You can easily track your crypto taxes and generate tax reports. Signing up is completely free, but if you go for a pro subscription, you can get a nice discount with the code BTC Hotel. And that is a great recommendation because taxes, as you can see, are becoming more and more excessive and the state really wants your money. And if you can't really track this well and don't have good reports, then you're actually in a tough spot. I really hope massive taxation doesn't come, but with tools like coin tracking, at least you can stay on the legal side if you can just generate reports. You can also see which coins are tax-free and which ones aren't. And now there's even a giveaway on top of that where you can win a premium account for a year, a coin tracking premium account. All you have to do is subscribe to our channel, like the video, and write in the comments why you want to win this pro account. But you must also leave your name, email address, or any contact details. So any contact info or your Telegram handle or something, so we can reach out to you if you win. So, big recommendation, check out coin tracking and definitely join the giveaway here. If you want to buy more Bitcoin, I'll drop a link to 21 Bitcoin down below for you. Super easy. You can also get up to 20% off the fees when buying Bitcoin with the code Bitcoin Hotel. You can easily buy Bitcoin. 2001. I'm signing off here from El Salvador. Let me know what you think about it. Free to subscribe too. Until then, peace out.